Okay, all right, I'm a little nervous, I admit it. Here's one reason why I am a little bit nervous. The top chart here shows the percentage of stocks which are above their 50-day moving average. In other words, if lots of stocks are above the 50-day moving average, it's a solid bull market. But as you can see, we just broke below the 50% level, and that makes me nervous. It tells me that maybe the big indices like the Nasdaq are really being driven by only a few stocks rather than the many. That makes me nervous. This is a leading indicator of the market, and it's going down. And of course, I'm always nervous. Hey everybody, Courtney Smith here with your latest edition of TradeSmith. And of course, here's the latest edition of the disclaimer. Oh, wait, no, it's the same as last week, so it's really not that new. All right, let's take a look here. Now, I started out with something that wasn't that bullish, but this chart is bullish. We can see that we're getting a little bit more volatility in the market, but notice how the purple predictor is moved up and is now starting to lead on the upside. Well, that's kind of bullish. So this is a more bullish chart than the one I just showed you. The Dow Jones, almost exactly the same chart. How about the Nasdaq? Pop. Now, the thing that's kind of weird here is you can see that I've been telling you for a month or so that the Nasdaq was where the action is because the purple predictor was so bullish compared to the other two big indices. But notice that the price is now on top of the purple predictor, not below. So this means that now the purple predictor is going to start to be a bit of a negative influence in this market. Still, we closed at new all-time highs on the high of the day. Looks pretty good. Just always keeping an eye out on any potential problems in the market. Now, seasonality, holy smokes, this is also kind of a weird chart. So the purple predictor, you can see, is grinding higher, but the price action is grinding lower. Now, purple predictor tends to be the leader, and here we have a divergence, which suggests to me that we're going to start to see the price of the IWM, which is the Russell 2000, we're going to start to see it turn around and start to move higher. And if that's the case, that will take our seasonality indicator back up to new highs. Right now, we remain on a bull signal, which means we have double-sized positions on. Holy moly, is that helping us make twice as much money as normal. Seasonality, look, it's just all bullish. What can I say? Should get a dip in January, but really, that's still a couple months away. But until then, looks pretty good. I'm just always nervous. What can I say? Yield curve is just all clear. It's not putting any downside pressure. In fact, it's starting to add bullish pressure in the market. The asset allocation, though, look at this. Money's flowing out of the stock market and back into the bond market. Now, the stock still made new all-time high, but money is flowing out into the bond market. Now, it could be coming into the market from other things like pension funds, receiving new money, and so on and so forth. But still, this is a little bit nerve-wracking as well. I like to see money coming into the stock market, not out of the stock market. Our stock market risk indicator also, look at that, weak. You see what I'm saying? There's some things that are making me a little nervous. All in all, still things are very bullish, but we're starting to see a few cracks in the facade. Not to cause a bear market, but to cause a 2 to 5% correction. Now, normally that's going to occur in January, so maybe I'm getting a little overly nervous. But on the other hand, the market has been so stable, so unvolatile, that a drop of 2 or 3% would be a good thing for the market, quite frankly. Global shares making new highs, but the action's in the U.S. right now. Bonds. Now, this is what I'm talking about. I've been talking about the purple predictor being very bullish, but we broke to new lows a week and a half ago. But then what we've done is rebound sharply, and as I say, the money's going out of the stock market, which is blunting the advance there. But you can see we've skyrocketed back up a lot. The purple predictor says we're going to go back up to 128.5 or to 129, which is the high of the chart. We need to break through this high that we made about 3 weeks ago. But if we break through that, I think this stuff's going to rally 2.5 points. If you're a futures trader, that's $2,500. That's not bad. So watch the price action this week. I got to believe we're going to break to new highs. I got to believe we're going to go up to 128 to 129. That looks like the technical picture here. The market was very happy with the appointment of Powell as the new Fed chairman because he'll basically keep interest rates pretty low. So it was a continuity from Yellen thing. And that's helping the bond market out, and it's helping out the stock market as well. Bond key factors, though, you can see most of them, 2 out of 3, are calling for lower interest rates. Only 1 is calling for higher interest rates. And in fact, we're getting those lower interest rates. Now, if those interest rates are lower, normally that's bad for the dollar. But you can see on Friday, we did a big key reversal there, which suggests that we're going to continue to see this market bull higher from the long side. So I said before we were going to get up around 97.25. I think that's where we're going. Now, if the dollar is stronger, then gold's probably going to get weaker. So we got to keep our eye out on that as well. Now, why is gold weaker? Well, 2 out of the 3 indicators are showing weakness. We're seeing the yen stabilize. That's the green line at the bottom. Only the CRB is really bullish for this environment. But it looks to me like we're putting in some stability here. In addition, fully paid up members, I'm going to show you an additional chart, which is quite bullish for gold. So freebies, just recognize that there's some hidden bullish things going on in this market, and that's why gold is stabilizing at least. Now here we have West Texas Intermediate. I said we were going to move a little, we were going to break to the highs. We are. I still don't see us getting to $60 anytime soon, though. So look for this advance to maybe go another week and then start to run into some resistance. All right, that's it, freebie for me this week. I don't need to nag you, do I? I don't think so. You know what to do, so go ahead and do it. This is what the cool kids are doing, and you know you want to sit with the cool kids, so check it out. All right, fully paid up members, hang in there for just a minute. We'll get to you right away with all the exciting trades that we have going on. Hang on just 1 second.